Hello guys, what's good? How are y'all doing? Are you guys ready for today? Because today is our last one day. We are gonna talk about the strategy, the holy grail, if you call it. It's not technically a holy grail. I mean, sometimes it loses, sometimes it makes profits, but then overall, you're gonna make profits. And that's work. That's work. Hold on a bit for me. I'm coming out to do something. I'll be right back. Alright, guys, I'm sorry for the delay. I'm back. So we're going to be talking about my strategy today. I'm going to teach you guys how I trade. But before that, you have to look at a few things. Yeah. So we're going to talk about liquidity. Yeah, liquidity. Liquidity. Now, what's liquidity? Now, it's a complex. It can be a complex concept. Yeah, but I'm just going to give you what you need to know. Like you have to really crazy thing and all that. Yeah. So liquidity is basically where you have money. So like loads of money. Understand? So it's like usually they say usually we like to say that that's where a lot of traders have their stop losses and all that. Yeah. So how do you identify liquidity? I'm going to teach you how to identify liquidity according to the strategy. Yeah. All right. So now we are in a bullish market, yeah, or an uptrend where our liquidity is going to be the highs and the lows. The highs and the lows. So these are the highs. This is a low. This is a high. 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 Now, if I'm buying from here, if I'm in the trade here, where am I going to put my stop loss? Here at the low. If I'm selling from here, where am I going to put my stop loss? At the high. Same thing if I'm buying from here, where am I going to put my stop loss? At the low. If I'm selling from here, I'm going to put my stop loss at the low. So because of this it creates what we call liquidity. Yeah. So there is liquidity at highs and lows. So where do you find liquidity? At highs. Just to make let me reduce the font size. Yep. So where do you find liquidity? At highs and nope. Find liquidity at highs and then lows. Highs and lows. Yeah. So there is liquidity here. 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 And there is liquidity here. There is liquidity here too. Right. Same for sales. If you are selling, same for a bearish market. In a bearish market too. There's liquidity here, 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 and liquidity here. So highs and lows. So what happens is that market usually reacts from liquidity levels. Market usually reacts from liquidity levels. So these are the levels that you want to either take trades off or take your profits off of them. So you put your stop losses there and you also put your take profits there because when market gets there, it's certainly going to react. It's either going to continue faster or reverse. You understand? So we're going to be using this liquidity, liquidity concept for our take profits and then stop losses. Yeah. All right. So let's identify some liquidity on the charts. So you can see that in this massive sell, there is liquidity here, liquidity here, liquidity here, liquidity here, liquidity here, 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 here. So all the highs and lows have liquidity. You understand? All the highs and lows. Now price came for this liquidity and look at the reaction. It started going up. Price came for this liquidity here, right? It started going down. So usually it can either continue lower or react in reverse. You understand? So that's how liquidity works. There are a lot of liquidities, but this is what's need for the strategy. Yeah. So highs and lows, take note of that. Now, say we have a support zone, right, and a resistance zone. Support and resistance zones. How do we know that a support zone is going to work, right? Or how do we know that price is going to bounce off or price is going to react from a support zone? We look at what we call a break and a retest. Yeah, break, retest. Now, what's a break? A break is when a candlestick closes beyond, either it closes above, closes for a break, right? It's when a candlestick closes above your zone or level. So if a candlestick closes above your zone or level, it's called a break. So for instance, if price is trading here and then we see something like this, we have a break. Let me make it well. We have a break. Yeah. So look at this. Yeah. So when price, we draw a level, yeah, and then price closes above it, or when the body of the candlestick is above or below, for above for supports and below for resistances, right? But to make it easy, just know that when the when you have a level, right, and then the candlestick body is a closest, right, the candlestick body forms beyond that level, either upward or lower, you have a close, you have a break rather. So what that means is that, you see, this level is supposed to like resist price, yeah, it's supposed to resist price from um going up, but price price pushes harder, right? Price pushes harder, and then it does not, um the support on that level is not able to keep it down, it's not able to resist it. So simply means a failed attempt to stop price, you see. So when you are trying to buy this, so there is a resistance, yeah, and then the buyers buy so much that that resistance is not able to hold. We call it what, a break. Same for the supports. Now there's a support supposed to push price up, right? Support supposed to push price up, but sometimes the sellers are so powerful and so strong that they are selling so much that they resist that support, that the level trying to give price, and then it closes below it. So we call that a what? A break. Call that a break. So we're going to be looking out for breaks. When a candlestick closes above or below a support level or zone, we call it a break. Now what is a retest? The same thing. This is same as the meaning in English. Retest is right after the break, right? Price then comes in. Not this time, not to the body, but with the candlestick. Yeah. So price comes in like this. It comes here. Then you see it rejecting from that level, right? So you can see that the candlestick has pierced through price but then the body is not in it. Then you see it rejecting from here. So let's see price is here. It taps here, it starts rejecting, and it goes up like this. You have a retest. What that means is that price has come back to test the level that it broke. So break, you go above the level, you close above it, and retest, you come back to that level to test it again. Right? So if the sellers are not able to stop the market and it starts going up, they know that okay, the buyers are having a lot of power now. They are taking control, right? So that is our retest. Our retest. So we look for two things. We want to see a break and a retest. A break and a retest. A break and a retest. Then do the same thing for the bearish analogy. So you have these levels. It's supposed to be a sub some it's supposed to be a support, sorry. So price supposed to like bounce off here and then go up, right? But then price continues lower, and then the candlestick that opens will happen to what, close below our resistance, which means this resistance has been breached, right? So a break is just breaching a level. This resistance has been breached. So when we see this, we know that we have our break. We have our break, and then what do we wait for? Wait for our retest. After price has reached the level, once price come back to that level and start rejecting from that level, they realize okay, the sellers are now in control and we can join them. So whilst this candle is rejecting, you enter from there. So a break and retest, it can be bullish, it can be a bullish break or a bearish break. You understand? It's not one sided. We have our break and then have our retest. Now I want us to look at some examples on the chart. Sorry, but before that, you should know that this is supposed to be a support level, right? So price was supposed to bounce off here and go up, right? But then you have to react to market. You don't have to be predictive. You don't predict. You react to market. You don't stay like strong with the decision you have made. Okay, this because it's a support, it's supposed to be a support and bring price up. No, sometimes price would want to do something different. What all you have to do is follow price. Your job as a trader is to follow price. Just follow price. Follow what price is doing. Respect price. Follow what it's doing. Then follow what it's doing. You're gonna make money. So there is this popular saying that the trend is your friend. The trend is indeed your friend. All right. So speaking about the trend is your friend, you know that this is a support level, right? So price is supposed to bounce off of it, but then price decides to breach it. So what happens now? That support now becomes your resistance. So note that support and resistance levels are actually neutral levels, right? What will confirm whether the level is going to be a support or resistance level is your break and then your retest. Do you understand? So that's how it works. So support can turn into resistance. Support support can turn into resistance. What can turn into resistance? And resistance can turn into a support, right? So price is moving down, yeah, it's moving downward. So this is supposed to be a resistance. This is supposed to be our resistance. It's supposed to stop price from moving down, right? And change the direction of price from a bearish trend to a bullish trend, yeah. But price decides to continue the bearish trend, so he breaches this resistance. Now this resistance will turn into a support for the sells, for the bearish market. You understand? So don't be rigid about it. Be very flexible. How you would confirm whether a support is a support will hold or not is by just checking the break and the retest. If there's a break and a retest, you know that okay, this support zone has been breached, or this resistance zone has been breached. So going we are going to continue the trend, and we are going to continue in the direction of the trend. All right, so this is the analogy of it. Let's look at the charts for market examples. Yeah. Okay, so today there was a break and a retest here. So this, let me show you the level I drew. Just let's just look at it. I'll come back to that later. Now you can see that this is a level, right? It's a level I drew. It's a level that I drew. Now price broke below it. Yeah, it broke below this support, this resistance. Yeah, it's supposed to be a resistance because price is moving downward, so it's supposed to be a resistance. It's above price, so it's supposed to be resist price from moving down, then push it to go up. Yeah, but it didn't do that. Price, this candlestick closed, it closed below this. Yeah, and the body of this candlestick is below this line, so it is a break. This is a clear break. Now what do we see? Price comes back into this zone, this support, this resistance zone that has now turned to a support zone, and then it starts selling. So you can see that. So it comes back, boom, break and everything. So I have break, retest, direction, boom. So you have a break, a retest, boom. Price breaks above it, retest, boom, go up. Price breaks below it, a retest, boom, we sell. Price breaks above it, and we have a retest, boom, up. Break, retest, up. Break, retest, down. This is our last example. Break, retest, up. Let's take another one, some few ones. So you can see how it's consistent. Break, retest, up, break, retest, up, break, retest, up, break, retest, up, break. Okay, then retest immediately. So you see this, a break, retest, boom, sells. All right. So with that out of the way, let's look at another vital thing we have to look at. All right, so we have our break and retest. And the next thing we are going to look at is what traders call top down analysis. Top down analysis. Top down analysis. And what is top down analysis? It's simply analyzing the chart from a higher time frame down to a lower time frame. So the top is a higher time frame, right? So you're going to analyze from the higher time frame down to lower time frame. So let's say I want to execute on the 1 minute time frame. So I start analyzing from the 4 hour. I look at what chart price is doing. I start analyzing from the 4 hour. I look at what price is going. I move to the 1 hour and I move to the what 30 minutes and 15 minutes and I move to the 1 minute. Now switching between time frames from the higher time frame to the lower time frame, right? It's what we call top down analysis. Yeah. So move from a higher time frame, I look at what price is doing there and make a decision. Okay, I'm seeing that you're in a bearish market, so I would like to sell. I check the 1 hour time frame. Okay, the 1 hour time frame is also saying we're in a we're in a bullish. It was like sorry. So I check the 4 hour time frame and I see that price is selling. We're in a bearish market, so I would like to sell because I said follow the market, follow what the market is doing. Okay, good. Now I come to the 1 hour time frame. I see that price is selling. It's agreeing with the 4 hour time frame. Good. 30 minutes, same thing. 15 minutes, same thing. Now I come to the 1 minute and I take my entry. I look for a good sell setup and I enter the sell setup. I take my entry. If I make profits, great. If I make losses, great. Right? So it's about what? Moving from a higher time frame, right? So examining the higher time frame down to the lower time frames, right? That's what we call top down analysis. Right. Then you have to know that there are some time frames that correlate. So if you're going to do your top down analysis on the 4 hour time frame, then you have to make your execution on the 15 minutes time frame, right? 15 minutes time frame. You're gonna make your analysis on the 1 hour time frame. You have to take your executions on the 1 minute sorry, on the 5 minutes time frame. Right? If you're gonna make your analysis on the 15 minutes time frame, you're gonna take your entry or your executions on 1 minute time frame, right? Now it's not really um rigid, yeah, it's flexible. What I'm trying to say here is that the 4 hour correlates with the 50 minutes, the 1 hour correlates with the 5 minutes, and the 50 minutes correlates with the 1 minute. Yeah. But for this strategy, what we are going to do is we're going to do our analysis on the 1 hour time frame and then take our executions on the 15 minutes time frame. Now, what do we do on the 1 hour time frame? On the 1 hour time frame, so let me just write the playbook down. Playbook, the playbook. This is the playbook, yeah. The real source. So one, number one. So we're going to the what? Mark our support. Mark our support and resistance levels in the one uh 1 hour. So the first thing we're going to do is mark our support and resistance level on the 1 hour time frame. what you want to do next. So let's just follow through. Yeah, let's follow through. All right, so we are gonna back test price action for the week this week. Yeah, we want to back test for price action for this week. And you said mark your support and resistance levels on the 1 hour time frame. Yeah. Now, yesterday I taught you guys how to mark support and resistance levels. Now I told you that when you are marking support and resistance levels, you use the upper wick is your resistance and the lower wick is your support, right? So if you want buys, if you want buys, we are going to mark the the last bullish candles wick like this. This is the last bullish candle in Asia session. Oh, now Asia session is the blue side, yeah. So just toggle the session indicator on. Yeah, so just put it on, you're going to see it. I already taught you guys how to add it to your charts. So you can go and watch the video if you've forgotten. You can watch the video. So you just do this. You mark it. The last bullish candles what upper wick. Just mark it. Then look for the last bearish candles lower wick. Yeah. So these are going to be your support and resistance levels. Your last lower wick. Let me just write it for you guys so that's last upper last bullish candles upper wick. Upper wick. And the last bearish candles lower wick during Asia during Asia session. So you mark support and resistance levels on the 1 hour time frame. How do you mark that? You look for the last bullish candlesticks, the last bullish candlestick during Asia session, and you mark the upper wick. You look for the last bearish candlestick during Asia session, and you mark the lower wick. I've already taught you guys what these things are. And I said this Asia session. This is Asia session, right? The blue one. Just add the session indicator, turn it on the blue side. So immediately you see the green, it means that this session has ended. The green is for London, and then these two are for New York. So this New York open, this first color is for New York open, and this for New York. This for New York AM, and this New York PM, right? But just know that. Let's look at this. So we're gonna mark it here. The as like I said, the last bullish candles week, which is this one. So this is the last bullish candle in Asia session, right? The last bullish candle in the blue zone, right? So from here to here, this is the last bullish candle. So we mark the high, and this is the last bearish candle. So we mark the what? The low. Now the reason why we mark the last bullish candle's high is that this is the last resistance that buyers faced during Asia session and before landing open. So it is a very important spot, very important level. So you mark that, and you mark that for this one too. So we're going to do the same thing for um Thursday. What was the last bullish candle? This candle right here. So I'm going to mark it. The last bearish candle, this candle here. So I'm going to mark it. Last bullish candle, last bearish candle, the last bearish candle, the lower wick. Last bullish candle, last bearish candle, Tuesday, so Monday, it will be done. There's it. Now, what do we do next? After marking these zones, what do you do next? We go to what our we move from the 1 hour time frame to the 15 minutes time frame. What are you going to look for? Look for break and retest. So you're going to look for break and retest. Sorry. Sorry guys. So you're going to look for break and retest on the 15 minutes time frame. That's what we're going to be doing. 15 minutes time frame. I want to look for break and retest because that's where we're going to have our execution. Break and retest on the 15 minutes time frame. Time frame. Right. So we're going to move from 1 hour to 15 minutes. Alright, so now this says no break and retest. Nothing happened here. Boom. We have a break here, we have a retest. So what are we going to do? We are going to sell from there. Going to so when the candle is rejecting here, it's rejecting from here. What do we do? Price comes here to our zone, starts rejecting, and it forms a bearish candle. We just enter from there. We put our stop below the rejecting candle's wick, right? So if it's a sell, we are going to put our stops above the rejecting candle's wick. You understand? If it's a buy, I want to put it below the rejecting candle's wick. So like this one is a sell, so put the stop loss above the rejecting candle's wick, right? Then we target We'll do our target. I'll talk about the target soon. Now we have another break and rate test. Only trade one, please. Just trade one. I'm just showing. I'm just talking about this because of how things are going. Like I'm taking us over it. Yeah, but you just trade one break and rate test. Don't trade. If you hit a stop loss, that's all for the day. Now we have a break and rate test. So you put it here. Then you, your targets have your targets. So no break and rate test here on Thursday. No break and rate test here too. But there's a break and rate test here. Sorry, there's a break and rate test here. This break and rate test. So you put your take profit, your stop loss below the low of the lower wick of that um rejecting candle, and your profit maxing. Break and rate test, break, rate test, put it here. Monday, alright. So we only had how many opportunities? One, two, three, four opportunities this week to trade a strategy. Now, how did they do? We only had three, four. We had one, two, three, and four. But I told you guys that you just take one trade. So three opportunities. So three out of 5 days, right? So we got setups on 3 days out of the five trading days. Yeah. Now let's continue the strategy. What do we do? Now the third thing I'm going to do is that you're going to put your TP. You want to set our TP, and where I want to put our TP at we want to place our TP at the wick. TP, place your TP at the wake of the second closest, sorry, second closest liquidity. As easy as that. So I told you guys that I showed what the liquidity is. I said liquidity liquidity are the highs and lows, yeah. So let me show you. So you have something like this. Now say we are buying from here, right? We are buying from this side. Let me change it. Right, say we are buying from here, right? We're going to put our liquidity. Place first liquidity. So second liquidity is what you are looking at. First liquidity, second liquidity is what we're looking at. We're not going to put it above it, we're just going to put it at the wick, the exact wick. That's what we're going to put our TP, right? So let's change the color to green, maybe green, right? Now, what do we do when we are selling? I'll show you guys. It's going to be very clear when I show it. When I show it to you on the chat. Now I want to sell from here. Where do I put my TP? First liquidity, second liquidity is what I'm looking at. At it what wick. What do I label it? Let me use red. Okay, so red. Just just as easy as that. Yeah, as easy as that. Now let's try it here. Now price rate test, it breaks here, so let's just mark our lows. We have our first low, second low. This is our second low, right? This is the second low. First low, second low. So what are we supposed to do? We are going to put our take profits here at the wick, the exact wick, this side here, the exact wick of the low. We are not going to put it here. We're going to put it here at where the body is. Yeah. So at the end of the body, so between the body and the wick is where we're going to put our take profits, right? But this low is in the wick of this low, so we add them together as one low. So it's one. So we move our take profits to this side. Between the body and the wick of this third low is this supposed to be our third low, yeah. But the wick the wick of the first low is in the wick of the second low. So we count all this as one, right? So this is one low. But the wick of this is in the wick of this low. So it doesn't make sense for us to put our take profits there. So we're going to look for the next liquidity, right? Then put it there, here. So this trade was a negative. It was a negative RR was 1 is to 0.75, but we smashed TP, right? Let's look at this. Now, as for this, it didn't get to the our first. It didn't even get to our first liquidity, right? So this one is it's still the trade is still running though. See what happens next week. Now let's look at this. We have a break, we have a retest. Now this is our first high. Yeah, but so when you're buying, you're looking at highs. When you're selling, you're looking at lows. First high, and this is our second what high. So first liquidity, second liquidity, right? First liquidity, second liquidity. Is this candles wick in this candles wick? No. So this is our second liquidity. It's our exact second liquidity. So we are going to put our TP in between the wick and the body. So like the midpoint, if you call it, in between the wick and the body. And what's the risk to reward? This reward was 1.47. It means if you invest $10 into this trade, you are going to get $14.07. Now, same thing for this one. First, first liquidity, up is close. Let me use this so you can go to the, okay, right. So this is our first liquidity. And you can see it's trading into the wick here. So this is also, it's not our second liquidity, it's our first part of our first liquidity. Which one is our second liquidity? This right, this liquidity right here. Yeah, this is our second liquidity. So where do we put our take profit? The wick. So let's remove this. What's our risk reward? 1.73. Right. So this week was, the risk reward was very tight because of the price action. Yeah. But sometimes that you get like 1:4, 1:5, and all that. Okay. So I'll look for some of those days where we had a good risk reward. So if it be like this, you had the 1:3. We had the 1:3 first liquidity, and this was our second liquidity. Second liquidity. So we were able to smash 1:3. So just that's just the setup. That's just the setup. I'll be doing recaps and all that to help you guys understand it well. I know it's overwhelming at first glance, but if you go to the video, you practice, and you go to the video and keep practicing, you realize that it's a very simple strategy. Yeah, it's very simple, nothing complex. So let's go over it again. What do we do? First thing, you mark your support and resistance levels on the 1 hour time frame. Now, what are support and resistance levels? You look for your last bullish candle. You look for your last bullish candle in Asia session. You mark the upper wick. You look for your last bearish candle in Asia session. You mark the lower wick. Now, two, you look for a break and a retest on the 15 minutes time frame. Then three, place your TP at the wick of the second closest liquidity. That is it. As easy as that. Remember to trade it on NAS 100. Do not trade it on any other pair. Just trade it on NAS 100. And don't trade outside this, outside these zones. So you want to trade in the green zone and in this color, right? This shade of yellow, I guess. But don't trade in when you see the red. Don't trade. Wait for the next day. Only trade when you are in green and this color. Alright, brown. Is it like brown or something? Alright, so that is it for the strategy. Tomorrow I'm going to be talking about psychology and risk management. It is very key, very important. And make sure you don't miss tomorrow. Sorry, not tomorrow. Next week, Tuesday, our next session. I'll be talking about psychology. It's very key and important. If you don't know psychology, if you don't have a good psychology, you don't have a good risk management. Any 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 trading strategy that you use will not make you profitable. You will fail at everything in trading. It's part of the reasons why my trading career my trading journey took very long because of I had bad psychology and bad risk management. Yes, I'm going to give you guys a source on how to risk well, how to manage your risk, how to think whilst you're trading, how to handle losses, how to handle profits and all that. Yeah, so make sure you don't miss it. It's going to be great. So be there. Right. Are there any questions? If there are no questions, we can end the boot camp for today. Are there any questions? Alright, great. Since there are no questions, bye. See you next week Tuesday, which is our last live session. Then the rest of the sessions we're going to have it in the chat group, or probably in the signal group when I go over the trees with you guys. Yeah. All right. Catch you.